All right, Candle Range Theory Trader back with you with another video showing you the USA Session Gold Mine, how to master it, the best trading setup to take, and put some extra money in your pocket using this simple method. So let's not waste time and get right into it. So what this video is going to cover is the average true range and candle range theory, along with some trading rules, the 8, 9, 10 pattern and decision flow, a real week of some back testing, and then a special bonus tip at the end. So be sure to stick around and stay tuned for that. So the foundation of this method is the average true range candle. What does that help us do? It helps us identify a high probability trading range that we can use to take a entry. So for example, when you look at a 1 hour chart, all of these trades are going to be based on the 1 hour chart. We're looking for a candle that has exceeded its average true range. So just for example, in the example here, let's say we have an average true range of 20 pips, where a pair will move 20 pips in an hour. But an anomaly is where a pair may move 35 pips in that same hour. Because it's exceeded its average true range, it may be ready for a pullback, and that's what we use in order to identify high probability range for reversals or pullbacks at a minimum. Really more so pullbacks. So to understand this method, you do need a basic understanding of the candle range theory along with average true range. There are videos for those in the links of the description if you want more in-depth analysis of those. But for now, basic understanding is all you really need. And so the candle range theory is the best way to put it is a 3-candle pattern whereby you have the range candle here. This will be our ATR candle we'll be looking for. We have what I like to call a money candle that simply pokes above the candle range is high and then closes back up inside of it. And then lastly, we have our entry candle here, which will take us to the take profit level, which is just the bottom of the prior range candle we identified. So 1, 2, 3, or as I like to call it, the 8, 9, 10, because we're looking at a 1 hour chart. So even though I know this says daily, we're looking at this same pattern on the 1 hour chart. This will be the 8 o'clock hour, the 9 o'clock hour, and we start trading at 10 o'clock. So here is our decision flow to ascertain whether or not we should be trading. Okay, so the first step when we come to a chart, at 8 a.m., when we put your cursor over the 8 a.m. Candle, okay, and these times are Eastern Standard, all Eastern Standard Time here, okay, New York session, New York session. Is there an ATR candle at 8 a.m.? If yes, we can continue. If not, there's no trade. We're not trading any candles that have not exceeded their average true range for the last hour, for that 8 o'clock hour. Next, is there a money candle at 9 a.m. that pokes above or below the ATR high or low? Okay, if yes, we can continue. If no, there's no trade. I will show you all of this, so please be patient. Then next, this is one of the most important parts as well. Where that money candle pokes above the candle range is high or low, we want to be sure that money candle is creating the high or low of the day. Okay, the high or low of the day. So it's not enough to just see an ATR candle at 8 o'clock and say, okay, it's time to trade. We want that money candle to be creating the high or low of the day. So in essence, during the 9 o'clock hour, we want to see the high or low of the day. That's pretty much it. Okay, so if all of these criteria are met, then we can start to enter anywhere around that money candle range starting at 10 a.m. So let's take a look at some real charts. All right, so this is just a week of December 2nd, 2024. So you can look at it for yourself if you want to. So for the sake of these charts that I'm going to show you, all the ATR candles are going to be 8 a.m. Okay, because these are 1 hour charts. If you see a blue candle, that means it's a long bias. And if you see a yellow candle, that means it's a short bias. Because when you set up the ATR indicator, you can set up your ATR candles to change colors. So that's how mine are set up. Again, that video is in the description of this. That video is in the description of this one if you want more information on that indicator. So these are longs. Okay, these are longs for the week of December 2nd, all 1 hour. So right here, ATR indicator right here at 8 a.m. here. Okay. Then at 9 a.m., this is our money candle that pokes below the range and closes close enough to it. Now, the bigger the range, the more forgiving you may have to be with with prices that may close a little bit outside of the range. So this one here did close about 10 pips outside the range right here. And then you had a little bit of drawdown right here at 10. This is our trading hour here. Remember, just 1, 2, 3. This is our trading hour right here. But you could have got in at the 10 o'clock entry. You would have had a little bit of drawdown, but it's not about where the price spikes. It's about where it closes. And it closed inside the range at 11. And you had 11 and 12 and you were out. This trade here went for 79 pips. All right. But this was a 79 pip range. On the more tighter ranges, of course, we don't like to see price close outside of the range, but more than about 5 pips or so. But if it's a bigger range, maybe give it a little bit of wiggle room. All right. Some of the rest of these are not that big, though, because remember, we are scalping. This right here was an 80 pip range. We had our 80 pip ATR candle here at 8 o'clock. 9 o'clock gave us the money candle where it poked below the range, closed close enough to the range to not give us a straight up breakout. And then we're pretty much just looking for the USA session to take back everything it did during London. If price went down, then we're just expecting it to go up, and vice versa for shorts, which I'll get into in just a second. So our entry would have been at 10 o'clock. You would have had some drawdown here. Notice the spike to the low, but this is just to scare you. Don't let these moves scare you, okay? Just hang in there and then watch price rise if the trade does work out. So the next one here, we have our ATR candle here at 8 a.m., 9 a.m., gave the money candle here. Again, it's not uncommon for a 10 o'clock candle to poke a little bit below, okay, the low. It may create a new low of the day in the long example here. But again, you have to be patient. Wait for the close. If you get out here, look at that. You would have missed this move. Wait for the candle to close. Be patient. And at the same time, don't over leverage yourself either. Don't go all in on these trades. Remember, we're just scalping. Okay, these trades are a dime a dozen. All right, next candle here, 8 a.m. ATR candle to the low. New low of the day here at 9. 10 o'clock did create a new low of the day, but that's okay because it just pinned it and then closed all the way back inside the range. Okay, so entry could have been anywhere in here, anywhere on this candle's fine. Went up for 40 pips. We exit right there. All right, so the next one, this was for 36 pips. Again, it's the same thing over and over, guys, okay? 8 o'clock, 9 o'clock money candle, 10 o'clock gave a little bit more consolidation. Starting at 11, price did go up and eventually hit the take profit of the other side of the range, all right? Let's see, here we have, this is dollar yen, textbook case here, 84 pips. We have our ATR candle, money candle at 9 o'clock, 10 o'clock. This was perfect. You could have entered right at 10, little to no drawdown. Price stayed inside the range the entire time, boom. It doesn't get any easier. It really doesn't. So let's take a look at some short examples here now. Short examples here. We have 8 o'clock, our ATR candle. 9 o'clock gave our money candle, and then entry right there. This one did come back a little bit before exiting. So this is one key rule that I do want to bring up to you, okay? At the latest, you need to be taking profit at 2 a.m. If price doesn't hit your take profit by the end of the day, which is 5 o'clock Eastern Standard Time, okay, when the market resets and the spread widens, if you've been trading, you know what I'm talking about here, then you want to be out before London starts. You can hold through Asia, do not hold through London, okay, because London gives a high probability of a reversal, as we saw here, where price shot up. So you could have been in this trade, and if you stayed in through London, bang. Now, can it continue through London? Yes, it's just the odds are just not there. These are the best types of trades that we like to see here. Once again, 8 o'clock, 9 o'clock gave the money candle. Entry at 10. Couple of spikes above the range, but again, no closes. It did not close back outside the range, and it just went right back down. Boom. Done. All right. Let's see here. We had our ATR candle at 9. Little poke above it at, 8 o'clock. ATR candle. Money candle came here. Entry right here. And boom, down to the bottom of the range. Done deal. Okay. Let's see. Next one. This was for 25 pips. 8 o'clock. 9 o'clock money candle. Little bit of a retrace here, which was good, but as long as it stays inside the range, we're good with that. And again, we want to exit before London comes along. All right. So that didn't quite hit the bottom of the range, but when it gets close enough in the day, if price is near the bottom of the range and the market is about to reset, or if you think that London is going to reverse, or maybe there's news coming up, just go ahead and get out. Okay. Anything is better than a loss. All right. So here, I wanted to include this one because sometimes you'll miss the trade completely, where you have your ATR candle and then the money candle and the move will all come in the same one. So it's boom and it drops. There's no trade here. This probably would have been like 5 pips or so. That's not worth trading. All right. Sometimes it will not retrace. It'll just do a straight drop to your take profit. So unless you drop down to like a lower time frame and would have got in on that, there's just no trade here. Now I'm going to show something a little later at the end of this video to show where it's possible where you can catch a move like this. So stay tuned to see that. So just be patient and give me a second. All right, so this one here, I wanted to include a loss to show that this method is not 100%. We have our 8 a.m. candle here, money candle here because it didn't close that much outside of the range. You did get a little bit to the downside here at 10, but then as you can see, price spiked right back up outside of the range. This is what you do not want to see. Price should not be spiking back outside of the range. If it does that, you can call it a break of the structure, or however you want to phrase it. Get out, all right? Your stop loss should have been up here anyway. But if you see things like this where price just rockets outside of the range, no, that's a bad sign. Cut your losses, get out, wait for the next one. Okay. Next trade here. Now this is a bit of an anomaly, but I wanted to include it to show you what can be possible. So this was a ATR range at 8 a.m. 9 a.m. gave a little bit of a money candle here with an equal high. Price kind of chopped around a little bit for 10 and 11, and then at 12, the price just pretty much tanked through the rest of the day. And then this was through 1 a.m. where price just kept dropping. It broke outside of the range. So there will be times where price will break out of the range, or in this case, break down outside of the range. But this is not normal. Typically, you always want to have your take profit at the bottom of the range. However, if you do want to hold through Asia, you can get moves like this as long as price continues to trend down. And sometimes you may want to target an equal low. But again, that's not really what I'm teaching. This is a little bit more of a day trade, not necessarily a scalp, especially if you're holding overnight. But some of these moves will be, they'll play out overnight for some of them. But again, 2 a.m. Eastern Standard Time, 1 to 2 a.m., get out no matter what your position is, okay? So some of you may be wondering, well, okay, I see about, the 20 pips, 30 pips, etc., but what if I want to make more? Well, let's keep things in perspective because you have to remember that if you're good at making $1 per trade, okay, for like 20 pips, that can pay you 20 bucks, all right? But if you can get 30 bucks or 40 pips or 50 pips at $1 a pip, anybody can do this, I believe. You don't have to have a big account to get $1 per pip. Okay, if you can average getting between 30 and 40 pips, even 20, we'll say 20 to 40 pips a trade in the USA session, you're talking about an extra 20 to 40 bucks a day. But now when your account grows, all right, let's say now you're at the phase where you can do $5 a pip. Well, that same 20 pip trade is now paying you 100 bucks, okay? Same trade, you just increase your pip value. Of course, 30 pips would pay you 150, 200, 250 pips per trade. And obviously, as we just keep things in perspective, once your account grows to the size where you can do 10 bucks a pip, you're making $200 a trade, 300, 400, 500. And then, of course, obviously, once you get a sizable account size, what if you're doing 50 pips, $50 per pip? Imagine making $1,000 off of just 20 pips, all right? Which was this trade right here. That's a 20 pip trade right here. Imagine this trade being worth $1,000, okay, for just a few hours of work. Would it be worth it to you? I think so. And of course, obviously, with the 50 pip move, which I showed you earlier, right, that was 84, but even more, all right? This was more than, so 50 pips plus 84 or $50 times 84 pips obviously is more than the 2,500 that this scale, this chart here is showing you. But again, there's still nothing changes. The only thing that's going to change once you have your method locked down is how much the pips are worth as your account size grows. Okay, so you can do this with a funded account or with your personal account, but always think scale. Just because you start at $1 a pip doesn't mean you're going to stay there, guys and gals. Okay, you always think scale. Okay, I may be making $1 a pip now, but I'm going to get to the point. I'm going to set a goal that I'm going to be at, say by the end of the year, I'm going to be able to make $10 a pip because my account size will be bigger. But the thing is, you always have to have the account size to be able to take those positions. I don't teach over leveraging. All right. So in conclusion, once price closes inside of your range, it should not go back outside of it and close. All right. Wicks to the range are normal, but it should not just spike up and break out the range. So if you're short and price breaks up out of the range where you're trading at, that's a bad sign. Get out. All right. If you want to have grace on the money candle, that's up to you. What I mean by that is this. Let's say, for instance, you have an 8 a.m. We'll use this chart, for example, here. No, here. All right. So let's say this is your ATR candle here, and then your money candle doesn't come at 9, but instead it comes at 10, and it spikes up and then closes below. That's up to you. All right. If you want to have some grace on there, this is just really the high of the day. You're really looking for the high of the day to hold, more or less, by 9 a.m. All right. By 9 a.m., you want that high of the day to be established and to just be locked in and not get taken out. All right. So if you want to wait, I would just say 1 hour max. You can, but your highest probability is going to be at 9 a.m. Okay. 8 a.m. is the ATR. 9 a.m. creates a new high. And then by 10 a.m., that high should be pretty much locked in. And the rest of the day is going to do the opposite of what Asia and London did. That's your best case scenario. All right. If it does something different, we're not looking for that. We get out. Okay. So, handle it by yourself and experiment for yourself to see what works best for you. So you have two exit formats in terms of your stop loss. Look for a price to not go 5 to 10 pips above or below your money candle. Or if you hold overnight, always consider the spread and get out before London starts. Okay, so just be out of your trade, be flat by 2 a.m. And then you can either set an alarm or set a take profit. And then you can, get out if price doesn't play out during the USA session before 5 o'clock. And as well, guys, I want you to consider this. Remember the spread. Okay, if you've been trading any length of time, you know what I'm talking about. I've seen spreads as high as 50 pips. Okay, you don't want to get margin call just because of the spread if you hold the trade overnight. All right. So you have to consider that when it comes to your position size. If you got like $100 account and you got a standard lot on it, okay, that spread could pretty much wipe your account out. So if you hold overnight, you have to consider that. Okay, you have to consider that. But always think to start small and scale up. 30 pips a day can earn you a good living. Okay, so now for the bonus tip that I promised. So if you want to trade at 9 a.m., because we talk about 9 a.m. being the money candle. If you want to do that and catch a move whereby price will tank like, let's see, I told you there was a way to catch this move like this. See how imagine catching this little wick right here. How can we put the odds in our favor to catch a move like that and all this is ours in like 2 hours? That's 1, 2. All right. A tip to that is to see if a pair has exceeded its average true range for the day, not the hour, the entire day by 9 a.m. Here's how that would look. I just marked it up. I did a drawing real quick just to show you. So let's say you go to the daily chart, and if you use the ATR indicator, it's going to show you what the average true range is for the day. If you just put the mouse over it, it'll show you, let's say it's 100 pips, all right? If you come to the chart at 9 a.m., and you have an ATR candle at 8, started at 8, closed at 9, and let's say the pair has gone 150 pips up in one direction, all right? It's exceeded its average true range for that day, the entire day. The odds of it going down are now higher. So what that means is this: at 9 a.m., okay, after this ATR candle has closed, if you see price poke a little bit above the 8 o'clock high and then start to fade away, as soon as it closes back inside of it, go ahead and take that trade short. And something like this, well, you'll see it in the price. You expect the price to just tank down and at a bare minimum, take out the 8 o'clock price action. And it should look like this by the time it's done. Let me see. Let me go back to that one more time there. It was a short. Yeah, here we go. Should look like this, okay? So this is this, all right? But again, that criteria has to come into play here. We want to see price exceed its average true range by the time USA session starts. And if it does that, then like remember we use that rubber band analogy. Price can only go so far before it does pull back. Do not treat this as a reversal though, okay? Your take profit should still be the same. I don't care if it's gone 200 pips above the ATR. I've seen pairs where they'll just keep going and going and going for that day, and maybe they'll pull back the next day. It's unpredictable, so you always want to manage your losses, manage your risk, set your stop losses or a bare minimum, a price alert, because once price closes back inside the range like this, see how it never broke out? This is a drawing, but right here on this example on slide 20, see how it poked above it a little bit and then came right back down. And you're expecting this. You're expecting a straight drop. You're not expecting something like this where it's going to chop around a little bit and then shoot right. This is not that. All right, you're expecting this because price has gone up so far for the day that it pretty much has no choice but to just pull back. All right, but again, that has to be if the range for the entire day has been exceeded. Then you start looking for setups like these, but they're rare. Okay, they don't happen a lot, so stick to 10 a.m. That's just a little bonus tip, but don't make something like this the foundation of your trading. Stick with the basic principle of the candle range theory. This right here: 8, 9 o'clock, 10 o'clock. 8 o'clock ATR candle, 9 o'clock money candle, 10 o'clock. You master that, get a few of those a week, get like 3 a week, make 90 pips a week, and figure if you're making $10 a pip at 90 pips a week, that's extra $1,000 a month. You could be $1,000 a week you can be making. Okay, just with just that simple setup I just showed you. All right. Again, master the setup and then set a goal for your pip values. All right, and that's how you're going to start writing your own paycheck. So I appreciate your time and attention. That's how to master the USA trade, turn it into your own personal gold mine. Thank you so much for watching. Leave a comment, like the video, share, subscribe, and I appreciate you. Have a great rest of your day.